Yo, what's going on, guys? Welcome back to another video. Today, it's going to be a long one, but it's going to be super, super valuable to you because I'm going to give you a completely free course, everything you need to know, no paid courses, nothing like that. A to Z, everything you need to know about selling options, selling puts, selling calls, and collecting premiums from basically deciding at what price you want to get into companies, at what price you want to sell them, and you're making money on both sides. This is my favorite strategy for trading options. So I know it's going to be super, super valuable to you. So it's going to be a long one, guys, but I want to give you all the information you need to be able to go out there and make educated decisions for yourself. So, go get yourself some, some coffee, some water. And also, we're going to do a special giveaway on this one, where we're going to do one lucky winner. Actually, well, maybe we'll make it two. We'll make it two. Two lucky commenters down below will actually be able to get a free one-on-one option strategy call with me, meaning we'll be able to hop on a call. I'll walk you through this strategy in a more one-on-one way. And then you can ask me any questions, anything like that whatsoever. Again, I'm not a financial advisor or anything like that. None of this is to be taken as financial advice. I'm just some dude on the internet that's sharing the strategy that's been working for me for literally now close to 7 years. I've managed a 7-figure portfolio with this strategy and multiple 6-figure ones. So I like to think I kind of know what I'm talking about here, but I'm not here to hype you up and make it seem like this is some get rich quick scheme or anything like that. I think you guys are sick of that. And that's what this channel is really all about. It's about transparency, no hype, just real stuff, right? Like from real people actually doing this stuff. So let's go over the shoulder. All right. So, a couple little prerequisites for this, okay, is you want to make sure you have some sort of brokerage account already set up. I don't care what you use. It literally doesn't matter to me. I'm going to use Robinhood in our examples because I know a lot of people love to use Robinhood, and it is a very, very simple app to use for a majority of people, okay? There will be a lot of various links down below in the description with free resources. There's no affiliate links. There's no Robinhood link or anything like that I have or anything like that. I'm sure I'm losing out on my free shares from that. But again, I don't care. This channel, guys, I finally have the time after running a massive company to be able to set aside to start this. And this is something I've been wanting to talk about for so many years. So I'm just excited to be able to give this stuff to you guys because I literally get so excited and I tell my friends, my family, and they're like, what are you talking about? Now I'm going to direct them here and be like, yo, just go watch this full course that I've shot showing you how to do this, because it's going to open your eyes to so many things. So the strategy is called quad option strategy. Okay, it's called quad option strategy. What happened? No, don't. It's giving away all the goodies. Okay, sorry. Pretend rewind. We don't edit here. All right, we don't edit here. Okay, we're we're going in raw. So here's our option strategy. There's essentially 4 income streams, 4 premium streams, 4 ways that you're making money on a trade in here, and those 4 are cash secured puts, covered calls, dividends, and appreciation sale. If all of that sounds foreign to you, don't worry about it. We're going to dive into each of those, okay? But high level, what this strategy entails is you get to decide what price you buy a company at. And you're like, okay, Pete, like, cool. Like, I can go do like a limit order and say, like, I'll buy Tesla, at, if it hits, 370. Like, cool, Pete. Well, this is something I never knew about. What did you know that you can get paid a premium, an income today into your brokerage account for saying you're going to make a trade, right? It's awesome, right? And we're going to get into that, right? Covered calls. That means that you can decide at what price you sell your shares. I'm sure, like, Pete, that's not groundbreaking information. Like, cool, I can also go out there on the marketplace and sell my shares. Well, did you know you can go out on Tesla and be like, you know what? I'm going to go sell my shares. If it hits like $450, I'll sell my shares. Now, of course, you're going to make money from selling your shares at a price higher than you bought them for, but you can actually collect a really juicy premium for saying you would do something like that too, right? And then there's our dividend, which is my favorite thing is that, like, guys, I really started out as like a dividend investor, like when I was still working full time, like 12, 13 years ago. Like, I always had this obsession with dividends. I don't know why, because honestly, they're not that great when you see this strategy, but it's like that little cherry on top, right? Like we're getting premiums for our covered calls, our cash secured puts, and then it's like, okay, let's toss a little bit more on there. And that's a dividend. It's not a ton, but it's like, okay, it's a nice to have. We're getting a little bit more money from our shares. We're putting our shares to work a little bit more. We're putting our money to work a little bit more. And that's what this whole strategy entails. It's putting your money to work a little bit more than just buying like Vanguard funds, which I totally recommend. A majority of your portfolio definitely have like those funds that you set, forget, don't touch. You buy it on a monthly, weekly, daily basis. And yeah, it's collecting dividends, it's reinvesting those, isn't fantastic. But then this side of the portfolio you're going to see is awesome, right? It's awesome. And then appreciation sale, I think that's pretty self-explanatory. But if you don't know, let's just a quick explanation of what appreciation sale is. Let's say you buy, obviously Tesla's taking a dump today, but you buy it at 386, and then Monday morning you sell it for $400 if it comes back. Right, that's your appreciation sale, right? Like, do the math. You make money because you bought it at 385 and you sold it at 400, right? Like that's appreciation. Now, all of these are very important. Okay, couple little things that I'd rather say right now than just kind of throwing them out in the middle of the video. Number one, this strategy, key thing. Don't do this strategy on shares you absolutely don't want to lose. That's not to say you're gonna lose them, meaning you're not losing them, you would be selling them. Like, don't use this strategy on, like, let's say you buy Apple at $20, right? Like, you got them handed down to you from your father or something like that. And you got shares at like Apple for $20 and you never want to sell them, never want to sell them. Do not do this strategy on. Like, don't do that. This strategy works, as you're going to see, because we're buying shares at prices we enjoy, right? And we're willing to buy them at, and collecting a premium for saying we're going to do it. We're selling shares for a price that we decide, and we're collecting a premium because we're going to do it. We're collecting a dividend while we hold those shares, and then when they finally get sold, we get that appreciation. So if you never sell your shares, you're missing out on a massive amount of premium or money that you'd make from selling your shares. Right now, I know a lot of guys, I get into arguments on like X and stuff with people about this stuff. And it's because they go after, like, they only premium chase. Now, don't get me wrong, like, chasing premium is fine, but you're missing out on that appreciation sale, like, which can be massive, as you're going to see. It could be 4 times the amount of premium that you would get. So my second rule, after like number one, like, don't do this on a stock that you don't like want to lose, is don't fall in love with a stock. Like, with this strategy, you have to get your emotion out of this. This is like a great trading thing. Like, get your emotion out of this. Stick to the plan, right? And truly, that, I'm on Reddit and X like pretty much all day long, like helping people with this stuff. Is like, so many people, they don't stick to their plan, and then they wonder why they're then like stuck holding a bag, or they lose a whole bunch of money. As you can see with this strategy, you can't really lose as long as you're not going after like weird, sketchy, penny stock companies. If you're going after companies like that you believe in, and you actually like and you believe in, okay. Worst case scenario with this strategy, you're stuck holding a company for a long time. But even then, you're selling covered. We'll get it. Let's just go over it. Okay. So we now have gone over a high level understanding of what this all looks like. Okay. Now let's go over the shoulder and kind of go into a little bit of an example. Okay. So, really simple research tool is Yahoo Finance. I'm trying not to hit my mic here. Hopefully it's not like completely blocking me, guys. I'm sorry. Is Yahoo Finance. Now, there's a lot of cool other tools out there, like Trading View, and Robinhood actually has a really cool, the Legends thing that they launched recently is cool. But let's just use Yahoo Finance. Everybody uses Yahoo Finance because it's very simple. All right, and we're going to use Coca-Cola as our example. Why do I love Coca-Cola? Well, guys, when I look at Elon Musk Diet Coke consumption, no, okay. But when I look at companies that I do this strategy on, and this strategy is really called the wheel, right? As you're going to say, it's called the wheel strategy. I like to do it on companies that I, for the most part, in 10 years from now are going to be here still. Because again, you might be stuck holding something. You're not going to be stuck probably holding it for 10 years. I mean, you might, but like that's like, I mean, the chances are very slim. But I like to do this on companies I believe in and I like. Like I love my Diet Cokes, right? Like Coca-Cola, like great company. Like, I believe in Coca-Cola, right? And that doesn't mean you have to believe. You have to go get your own conviction in your own company. I'm just sharing you guys my thing. So when we find this company, I'm gonna get this is just one of my watch list companies. There's a few things we want to do. Okay. Number one, does it pay a dividend? Okay. Perfect. Does it pay a dividend? Perfect. Number two, is it in our budget to trade options for? This is important, I think, for a lot of you because to be able to do the quad option strategy, selling options, the wheel strategy, the unfortunate truth is this: if you're broke, you can't do this. So go get a job, do whatever you got to do. Like you might need to go like figure out your life first before you do this, okay? And I'm being honest. The reason for that is with selling options and the strategy that I love so much, it unfortunately is kind of gate keep kept away from people that don't have money to do it. So one option is always this is like this should always you should know this already, but I'm assuming you don't. One options contract represents 100 shares of a company. All right, one options contract represents 100 shares of a company. So if I go out there and I want to sell a put, and we'll get into all that in a second. But if I want to go buy a contract, I'll just be very simple. If you want to go sell a contract of Coca-Cola right now, right, it's going to cost you have a collateral of $6,300, right? $63 times 100 shares is $6,300. You're going to need that money, right? As collateral in your account, right? In your brokerage account. Now, you can use margin. If you're just a beginner, I would highly suggest understand this all, understand the math of it all, understand like the returns that you're getting over a set period of time and like understand yourself a bit more before going in and going on margin. Because again, just be safe here, guys. Like I see so many people blowing up their portfolios, like it's just bad. So what we're doing is we're selling calls and we're selling puts. Where you get hurt, and again, if you click this video, I'm sure you watch other trading content, is buying options. I recommend you stay the hell away from buying options until you are a very experienced trader, right? And we'll talk about buying options on this channel, but for the most part, for most of you that I shoot this content for, you're busy people, you've got a family, you've got a great career already, and you just want to be involved in the markets a little bit more, right? This is the strategy. This is exactly what I do, okay? So for example, Coca-Cola, I like this company because it's a little bit more cost effective. I would imagine most of you that I'm trying to speak with, you got $6,300. Like $6,300 isn't like life-changing amounts of money for you. Like if you like bought Coca for $6,300, 100 shares, like you'd be okay sitting on it. You're not like that's not like your life savings, right? So like again, just want to say that. And I will give you guys another company here in a moment that, if you are on more of a budget, I'll give you guys another one that is I just love so much. But you have to wait for that because it's such a good one. It's such a good one. All right, so Coca-Cola. Your next thought is that you want to have after you're deciding. Okay, it has a dividend. It has it's in my budget to be able to do this wheel strategy on. Your next thing that you want to understand is two things. You want to make sure that you get into companies or you're opening up your puts, you're selling your puts on days the company is tanking. And the reason for that, and I'm gonna show you guys kind of more technical analysis about this in a moment, is because when a company is going down, what does that mean? A lot of people are selling it. They're selling off. They're scared. Some news maybe came out. They want to get out of it, right? They're worried. They're scared, right? That's when your premiums that you're going to be getting are the best. And then when a company is on a green day, that is when your premiums are going to be best for selling calls. Okay. And we'll get into all that. I just wanted to give you guys kind of like a high level overview. So we want to start with the cash secured put first, right? That's where we want to start. Okay. So I'm going to go into a tool that's going to help you track things better. like when you wake up, this is what I do like basically every morning. I go to MSN, and I know some of you are gonna be like, P MSN, what the hell are you doing? Right? Who's using MSN.com? I don't know why. I just love this tool to give me like high level overviews in the morning of stocks, fundamentals, and I can do quick comparisons and stuff like that of various companies without like having to go really deep. And you'll see, right? So I have a couple little watch lists here. So let's just go open up my options one. And what I like to do is I just quickly do a change, right? So, and this I'm looking for setups, I'm looking for opportunities, right? I'm looking for setups and I'm looking for opportunities. So right now I'm looking, okay, Microsoft taking a massive dump, but it's $416. If I want to, get into sell an option right now on Microsoft, I would need to have $41,000 in my account to be able to open up one contract. Is that in my budget? Is it not in my budget? I don't know, right? That's again, you're gonna have to decide that. Nvidia, okay, down 2% today. Okay, now we can start looking a little bit more into it, go into the charts, and we will in here in a moment. What's also nice about MSN, and this is just if you go to the URL msn.com, money or whatever it is, just MSN money, and just create an account. I don't know. I love it because like I could do my fundamentals here as well. I could see my PE ratios. I could see my return on assets, return on equity, earnings per share, my net margins, dividend yields, right? Like I could see all those things at a high level. And then what I really like doing about this as well is like, let's say I think I'm going to take a look at Nvidia today, is I love to do little quick comparisons. So let's say I'm interested in the video. I'll go look at like some competitors or related companies in this space, and I'll type it in. I'll be like, okay, AMD is another one I really like. I do like AMD. Okay, let's see. Okay, AMD is up today, so that's out of the question. Nvidia is taking a dump right now, and it has been all week. I could see my volume. I could see my 52-week highs and lows, market caps as well, to give a better understanding of the of the like how the price and all that factors in to my research. Then I can go over here, I can look, okay, what's the PEs right now? Nvidia at a 48.74 PE compared to 100 PE on AMD. Okay, and you're doing basic research. You're seeing revenue growth. You're just seeing some high level numbers. No dividend yield, but that's okay. With growth stocks, you're typically not going to see like a big dividend by any means. And that's okay. We don't always have to follow the quad option strategy if we see great opportunities. So for this example right now, on our first leg, which we're going to do is our cash secured put, I'm seeing the opportunity today as being NVIDIA, right? It's $120 a share. So I would need $12,000 in collateral in my account, which is within my budget. And that's where we're going to start. So the next thing we want to do is head over to our Yahoo Finance and do some basic charting. Technical analysis for the most part, guys. No one knows if a stock's going to go up, down, sideways. No one thought last week that Nvidia was gonna absolutely tank, right? No one thought that, but it does happen. Okay, so understand we're just building a thesis here. This is by no means a guarantee that something is going to happen. You have to understand that. Okay, so let's go over to our chart tab right here. Okay, don't be intimidated. We're going to go walk through this. Indicators. Click indicators immediately. Don't do anything else. And type in RSI, add it in, leave the default settings. Bollinger Bands, leave default settings. We're going to talk about it. These are only two indicators as a beginner doing the wheel strategy that you need to worry about. Okay, that is it. Let's talk about Bollinger Bands real quick first. Okay, the Bollinger Bands basically tells you using past data what range a stock is going to trade. I don't want to say is going to trade in, but usually is likely to trade in. So for example, right? Look, every time Nvidia has hit this top of the Bollinger Band, it's retracted. Every time it hits the top, okay, it starts retracting. Sometimes it doesn't even get to the top and just starts retracting. Right here, retract. Right here, look at this great setup we had. What is this on the 23rd? Hit the top, retracted down, right? And now where's our share price? We're at all the way at the bottom of the Bollinger Band. Well, let's look at that. Right? Oh, it hits the bottom of the Bollinger Band. Sometimes it goes a little under, and then it retracts up. Hits the bottom here, retracts up. Hits the bottom here, retracts up. It doesn't mean it's always going to retract up, but looking at data, you can usually tell that it's going to. Okay. Again, technical analysis like this is it's just to build like a thesis for yourself. It is by no means a guarantee. What I'm looking at when I want to sell cash secured puts, meaning I want to buy a company at a price that I want to buy it, I'm looking at it being towards the bottom of this Bollinger Band. Why? Because that usually means a lot of people are selling the stock. There's fear of this stock, there's uncertainty, right? And that's where your premiums are going to be best. RSI right here is called your relative strength index. It's not complicated. It basically just means how overbought or oversold a company is. It's very similar in ways, honestly. Sometimes you don't even need to look at your RSI. The Bollinger Bands will tell you everything you need to know. So if I'm here right at the bottom, if I'm at the bottom of the Bollinger Band, you're usually going to be oversold, right? So here we're at a 38. 50 is like right in the middle. Anything in that 40, 30, 20 range, that means there's a lot of sellers, right? It's being oversold, right? And what does that do? When a lot of people are selling a company, it drives the price down, right? And now if it's over 50, it's in that 60, 70 range. That means that a lot of people are buying it. They're excited. There must be some news that dropped or whatever, and it's going to be trading towards the top of the Bollinger Band. Okay, so when I'm between the middle Bollinger Band, which it basically gives you your 30-day moving average over the past 30 days, Nvidia has traded around $135 or has traded around $135.84. That's that middle of the Bollinger Band. That's just giving you your 30-day moving average. I like to open up my cash secured puts when it's between, right, this middle Bollinger Band and the bottom Bollinger Band. If it's towards even the way the bottom, that's even better because of the premiums will be a lot nicer. Okay, so this is what I'm looking for when I'm looking at technical analysis. I'm looking for setups, right? So I've now found that, okay, we are Nvidia. I looked at here in my watch list. I saw an opportunity. I did some basic technical analysis on it. My next thing is I'm going to do is I'm going to go look at the options chain. So let's head over to Nvidia on our Robinhood app and type in Nvidia. Right here, we obviously in Robinhood. You want to click Trade Nvidia Options. Okay. Now, don't be intimidated by this. We're going to go over it. First thing I want you to do immediately when you're on this page is get away from buying. Click sell. We're safe. Okay. Next thing we want to do is sell a put. Remember, we're doing a cash secured put. A cash secured put is selling a put. You're going to run there's so many ways that people say it. They say they're cash collateral put, like there's so many cash sell put, there's so many cash secured put, there's so many ways people say the same thing in this space. Just don't be intimidated. It's selling a put. You are selling a put, right? And that is again, I'm gonna repeat things a lot here because I want you guys to really understand. We're selling a cash secured put here. Cash secured put, what does that mean? That means the put is secured by our money. Remember when I said your brokerage will require you, it won't let you execute the trade if you don't have the money to purchase those Nvidia shares at the price that you wanted to buy them at, right? So let's take a look here, right? So let's scroll down here, right? So Nvidia is at 120 right now. We're towards the bottom of that Bollinger Band. And then I'm looking here. I'm like, okay, you know what? Let's see over the past like 6 months, 3 months, right? Like let's kind of take a look. Where has it been at, right? So we could see here around like, around September, we're around 103. Around here, we're around 104. Okay, let's, can I get in that around that price, like, and get a decent premium? I don't know. Let's go take a look, right? So right here, we're looking at it. Oh, sorry. Before, actually, this is a good example, right? And then we're looking here, right? We're seeing 105s, 104s, right? And I'm gonna click into this, okay? And I'm gonna see a bunch of information, but like, I'm just gonna show you the whole trade real quick. I'm gonna click this, and then you're seeing I'm in the right place. Cash secured put. I'm gonna open up a 104 put, and then I'm gonna get paid $4 for saying I'm gonna do it. $4, Pete. All this work for $4. This is where expiration date comes in, and I want to show you this because expiration date basically means at a high level, if this stock hits that price by this date, I will buy them, right? My rule of thumb for the most part, beginner friendly strategy is go 30 to 45 days out. There are cool strategies that you could do on stocks that expire weekly. We're not going to do that right now. There will be videos on this channel about that. So I see a February 28th expiration. I see a March 7th expiration and a March 14th, day before my birthday. March 17th is 36 days away. So I'm going to click that. That's a sweet spot for me. All right. Now I'm going to close out this put. So now I'm looking. Okay, let's see. let's see let's see if we can get that 105 again. All right, 105 here. All right. Now, a few things here. Okay. There is, you know, growth stocks usually are going to have a ton of volatility in them. The open interest is decent here. I'll have a video that talks about all these other metrics here. I think for the sake of this video and most of you doing wheels, you're going to have enough information to do it on, right? The big Greek that you want to pay attention to is delta. Okay. The delta here is 0.23. In a nutshell, you know, I know, like, in a nutshell, this basically means there's a 23% chance that Nvidia will hit $105 on by the 7th. Okay? That's what that essentially means. Now there's a very technical explanation of it, but for the most part, that's what that means. Okay? For like simple explanation terms, okay? And we like simple here. Okay? Now, the closer you get to your share price, right? Like these are all our strike prices, share prices, the higher that delta is going to be, right? For 114, that's a 35% chance, right? If we go right at 120, which is called at the money, there's a 44% chance, right? This is where you kind of want to gauge your own risk tolerance. For me, like Nvidia is a company like I do believe in, so I would love to buy it at 105, right? I would love to buy it at 105, right? So I can be a little bit more risky, or I don't. If you're a beginner, I do recommend staying in that 20 delta range. I think that's a nice sweet spot for you to kind of get an understanding of all this stuff and not like be super stressed about it. All right. So we're going to go with 105 right here. Right now, we're going to click our plus sign right here. Okay. Now you're seeing what's this number? 405p. What's this? $4.05. Remember, options are all in increments of 100. So it's 405 times 100. You could see here, we would actually collect $410, right, today into our brokerage account. The next thing you're saying is, Pete, what is this? This is terrifying. Max loss, $10,090. Pete, what are you telling me to do? This is crazy. Your max loss here is if Nvidia goes to zero. That's what that means. That basically means if Nvidia goes to zero, it goes bankrupt, it shuts its doors. Yes, you could lose your money. Now, is that a possibility? Everything's a possibility. I'm not going to be the one to tell you, oh, Nvidia can't go out of business, right? But like realistically, do we believe like 30 days from now Nvidia is going to be out of business? Like, I don't know. Like, I'm like, for me, no. Like, I believe no. Like, you have to make your own decision. But that's what that means. Max loss. So I wouldn't be like, oh my god, I can lose 10 grand. Like if you're picking good companies that have like been around for like 30 plus 50 years, like the chances of them going out of business in the next 30 days, like I don't know. Like you're gonna have to make that decision yourself. I'm not gonna tell you what to do. But we're collecting $430 today. Right. So if we click continue right here, we could see how many contracts, right? And remember, it's telling you 100 shares each. It's telling us cash secured put. We're in the right place. Okay. And you could put as many contracts as you want here. Right. And we're going to collect, $430. It's obviously changing, right? Because the market is open and it's constantly changing. And this is where you could select how many you want. Let's say you have a bigger budget and you want to do 10 contracts. You'd be collecting $4,299 into your brokerage account right away. That means it will be deposited into your account to use to buy things with or whatever you want to do, right? So for this example, we're just going to stick to one. Okay, next thing I like to do is run this through my calculators, my CSP premium calculator, very fancy. So I'm going to take this 434, right? And I'm going to go over to my premium calculator. Very, very simple. I will leave a link for it. Let's just do 435 for the sake of simplicity here. 435. We're collecting $435 in premium today. What is our collateral? What is our collateral? Remember, this is a cash secured put, so you need to have that collateral, that money in your account to be able to do this. So your Robinhood will not let you execute this trade if you don't have at least $10,500 in your account, right? Why? Because 105 times 100, right? So, I know you guys know this. So 10,500. This is just going to be if we have multiple contracts. So I'm just going to select 1 and 1 right here in our calculator. And you can see we have a collateral of 10,500. Our monthly return on this is 4.14%. This is why I love this game. Where else does that happen in the market? Like, where else does that happen? Not many places, right? For on 10,500 in 1 month to collect to get $435, a 4.14% return, annualized 50.40%. Annualized premium, if you do this on a monthly basis, is $5,293. It's pretty sweet. That's pretty damn sweet. So that's our cash secured put, right? We collect that premium. Now you might be thinking, well, now what do? I opened it up. I got $435 in my account. Now what do I do? Well, that's when you go into managing your cash secured puts. Okay. Now, the cool thing about managing your puts is most of your options, they will expire worthless, meaning that as we get to March 7th here, more likely than not, if you didn't choose like a very aggressive delta, Nvidia is going to stay above 105. Your option will just expire and it'll leave your account, and you will collect your 435. You already have it. Your 435 is yours today. Like when you open this, or at the time I'm shooting this, obviously your numbers will look different. You know that, right? Like obviously markets are moving. That's why all these days, all these videos are like a day or two delayed, right? But you're collecting that right away, and that's done. However, there's a few things that can happen. All right. So let's go over option number one. Option number one is uh March 7th rolls around. You got your premium today, and then 36 days from now, you didn't log back into your brokerage account. You log back in, your option's gone. Your contract is gone. Poof, it's not there anymore. And your $435 is sitting in your account. It's been sitting in your account, right? Because you didn't do anything with it because you collect it right away. Cool. That's option one. Option two, Nvidia tanks. It hits 105. All right. And if it hits 105, now that $10,500 in your brokerage will be taken from you, and you will be now handed 100 shares of Nvidia at $105. And you still keep that premium, right? You're still keeping that premium, right? Which I like to look at when I actually get assigned. That's called getting assigned, when you actually have to buy your shares. You're getting them at a discount because number one, you chose a price that you wanted to buy them at. Number two, you also you collected a premium. So like you collected $435 in premium here already. So you're basically getting like a little over 4 shares for free, right? Like that's the way I kind of look at it, which is great, right? You got in a great price. Now you own the shares. Now what you can do is then go into selling your covered calls, because now you own 100 shares of a company, which is required to do your covered calls. Third option is you can manage the trade. If you don't want to be involved at all, like you truly are an extremely busy person and you don't want to manage trades at all, you could just open up your sell your put, and then set a calendar thing, be like, okay, check this back in like 30 days. For most of you, if you could take your emotion out of it like that, perfect. What I like to do is I like to close out my positions early. Okay, so let's do some basic management. Let's say 2 weeks pass, right, from today. We collected our 435, and Nvidia is running. It has bounced off that bottom Bollinger Band, and it has shot back up to 148, 150. Right, it's shooting back up. There's people are buying it. Everyone's believing in Nvidia again. What does that do to your option? It makes it worth pretty much nothing. So what happens at that point is you'll see in your account, it'll say, hey, it'll tell you, and we'll show live examples of this. It'll show that your option is pretty much worthless. So what does that mean? It's worthless. So I'm just going to quickly copy and paste this here, because this is what I like to do in the spreadsheet. I recommend you do the same when I'm managing them. So okay, I log into my account and it's telling me, Pete, the market's saying, hey, for $100 right now, let's just use $100. For $100 right now, you can close out this option. And think about it, it's only been 2 weeks. It's only been 2 weeks. Okay, 14 days. So for expiration, I'm going to put 14 right here because it's only been 2 weeks. If I can close this out within 14 days. So it's saying, okay, I give us $100 of that premium back, Pete, and we're done. We'll release that $10,000, 500 in collateral. You keep your $335 and you can go do other trades. You can do other cash secured puts. And I'm like, hell yeah, let's go. All right, let's see. Let's see what the numbers look like. So, right, market's telling me 335, right? You get to keep $335, Pete. Right, we're gonna take 100 of that premium back. You're gonna pay us, right? Because you have that 435 in your account. You're gonna give $100 back. You're gonna be like, I'm gonna close this baby out for $100. And now, what's that do to our numbers? Okay, premium 335 now because I had to pay 100 back to close it up. My collateral is going to get freed up, which is fantastic. My return 3.19% in 14 days. You guys, so exciting! This is so exciting. I love that I get to finally share this stuff. This is so cool. This is what I look at if it's worthwhile to me. This is what I look at. That the annual premium and the annual return. If I'm beating this, if I'm beating my annual return calculation here, then I'm doing it all day. I'm closing out early. And then I can free up my collateral and then do what? Rinse and repeat, baby. I go back to my MSN money, right? I go to my watch list. I look at my options, and now I'm like, okay, where's the next opportunity? Okay, Altria, right? Let's go take a look at Altria. Let's go look at the Altria, chart. Let's go to the chain and use my money for that. Rinse and repeat. I know what I just went through is a lot for the cash secured put, but that's what it is. That's what it is. That's all it is. That's what management is. Now, that's not always going to happen, guys. 14 days, it does happen. Dude, I've had days where the next day, the company shot up due to some news, and I was able to close my position out literally the next day for like $20 and was able to collect like all that premium. So a lot of people on YouTube, I've realized, will tell you, hey, just go let your options just let them go and just let them get to the date and expire. How, like what? Why would I do that? Why would I do that? Even if it's, let's say, 20 days. I'm still doing this in 20 days because now I've beaten my thing by more, let's say, because this was an expiration of 36 days, right? I'm still beating my expiration. I've now got 16 days on you. I've beat your annual return now, right? Which actually was lower because I forgot to put the expiration. That was 36 days out. I'm closing out 16 days over 2 weeks before you. I'm freeing up my collateral. I'm going to open up more cash secured puts. Come on now. Let's go. All right. That's how it's done. This is how you manage your trade, right? Whew, guys, we are at 37 minutes. Holy moly. Okay, let's do a little coffee break, right? Little coffee break. I forgot to mention, I did mention it. Remember, 2 people, drop a comment if you're loving this stuff. It's a new channel. You know how it is, guys. New channel here. I need some love. Hit the like, subscribe, do all those things. Drop comments, drop questions, right? I'm here to help you. Everything is free here. There's nothing paid. And then 2 commenters down below, we'll get on an option strategy call where I can walk you through this stuff in a one-on-one setting. You can ask me your questions. I'll help you out however I can from my experiences. Okay. And again, nothing here is financial advice. I got to say it. All right. So that's the cash secured put. Rewind, rewatch if you need to. Covered calls is basically the same exact thing reversed. Okay, it's reversed. With a covered call now, you know how in the cash secured put your collateral was like having that 10 grand in your account to be able to buy, the at 105 100 shares. In the covered call, you need to have 100 shares. Your collateral is 100 shares of your company. Okay? Is 100 shares of the company. So let's just use, the thing is, like, guys, I don't want to complicate this too much, but we're going to use NVIDIA as our example here. Actually, we can't do it. We gotta do this the right way. Because if I use NVIDIA as an example, it's at the bottom of the Bollinger Band. It's going to complicate everything. We're not. Let's just go and start this over. Covered call. Let's go over to MSM. Let's say, let's just find a company that's popping off. All right. That's not like super one of my favorites is popping off. Let's go. Micron, so slept on in my opinion. Micron. Okay. I come in here and I'm like, you know what? I own a couple hundred shares of Micron. Micron's popping today. Maybe this is an opportunity to sell some covered calls on Micron, right? So what do? We went to our watch list. We saw an opportunity, right? We have 100 shares of Micron or whatever the company is. right? So now, same thing. This isn't that complicated. I'm just going to type in micron, right, into our Yahoo Finance. And I'm here. I'm back where we're at. We go back to the chart, right? We go back to the chart and red flag. Okay, let's see. Let me know in the comments, right? 2 lucky commenters are going to win an option strategy call, right? Answer this question. Should I open a covered call on this? No. The answer is no. Why? Remember when I said you quick learners? I only want to sell my covered calls when the share price is between the middle Bollinger Band and that top Bollinger Band. And where my Bollinger Band at right now? Where's the stock price at? It's towards the middle of between the middle and the bottom. This would potentially be a good time to do cash secure puts, but it wouldn't be. I know I'm going over a lot. You're going to get this. Why? Because it's going up. By the end of the day, it might be back up here, and then I could do my covered call. You will get this with experience. What I'm talking about. It just takes time. You got to just educate yourself on this stuff. It will. You'll start seeing patterns in this stuff, and it'll be second nature. So for me, if I was actually going to do this trade right now, it's like 10:45. I would wait till maybe 2-3 o'clock Eastern, and then look. Hey, where's the price of Micron? Okay, it's now maybe at like 100, or maybe even like let's say around 100. Then I'll sell my covered call because my premiums will be nicer. But because it's going up right now, this is a bad sign. Don't do the cash secured put, even if it's between the middle and the bottom Bollinger Band. Okay. And you could see it's at a 43. So it's starting to creep up. It's not in that high 30, mid 30 range where we would do cash secured put. So again, analysis done. I love that I'm doing this live because now you guys can actually see me find a company I want to do this on. All right. Robinhood. All right, let's take a look. It's another company I love. Super cheap company, growth stock. Again, no dividend, not a problem. All right, let's do Hood. You'll find on these growth companies, the premiums are always juicier because look at them, look at the charts, they're crazy. All right, Hood, we're up. Green day, green sell covered calls unless Bollinger Bands, right? There we go. Okay. Look at this, almost off the chart. Let's zoom in. So we add our indicators again, as we did with our cash secured put. We add our RSI, our Bollinger Band. Middle of the Bollinger Band tells us, right, is over the past 30 days, our Robinhood has traded at $43. We are at $53 right now. We are in a green day, and we are at the top of the Bollinger Band. The RSI is at 70.65. People loving Robinhood. What does this mean? Historically, what does it say, guys, right? Hits the top, drops. Hit the top, drop. Hit the top, drop. Hit the top, drop. So we're probably going to have a little pullback here, right? Probably. We don't know. We don't know, right? No one knows. But we're most likely going to have it. We want to get into that covered call before it starts to have that retract. You don't always have to have that perfect timing by any stretch of the imagination, right? But if you can get it, the premiums are always the best, right? So we could see it's pumping, right? It's pumping right now, and this is a perfect setup to now move on to our next thing. You see how I do this, guy? It's very, very simple. Watch list, from watch list to basic, and we'll go into fundamentals and analyzing financials and stuff like that on this channel. So make sure you stay tuned. New videos every day. But this is what I do basically every single morning. I look at my watch list. Where do I see an opportunity? I go to Yahoo Finance. I do some basic technical analysis. I then, if the setup looks right and my indicators are telling me move on to the next step, I move on to Robinhood. I then go into here. Well, not to add confusion, Robinhood. We're trading Robinhood on Robinhood. We go to our trade options, and here we are. Again, get away from buy, sell. We're now not selling a call. We're selling a call. Coffee break, guys. My goodness. All right, we're selling a call now, right? That is a covered call. Selling a call, same exact thing. You'll get all this lingo over time. Okay, we're in the right place. Expiration date, right? There's stuff that you can do with 1 days and weeklies. Even look at this, guys. Just today, right? I can do this in 1 day and collect $55, right? If I do this, but there is probably a likelihood. There's a 36% chance. Actually, that's actually kind of low. That's kind of shocking. Again, we're not going to talk about dailies. I cannot allow myself to get sidetracked here, folks. All right, let's go to our 36 day out. Okay, 36 days out, right? Basic analysis. Let's go back to Robinhood. Let me go look at a 6 month. We're at all time highs, right? We know that. Actually, are we actually fully? No, I knew back in here it was. It doesn't matter. It's so long ago at this point. We're at all time highs. This is where you have to be a judge. This is why I said at the beginning of the video, some of the things that I say is really key. Like if you don't want to sell your Robinhood apps, don't do this strategy. For me, I'm not falling in love with the stock. I want to sell it at a price that's great to me. So for example, let's say I bought my shares of Robinhood at like $50. Right? Let's say $50 I got in Robinhood. I own 100 shares at $50. Maybe I did it with a cash secured put and I was assigned at $50. Now, 30 days from now, what am I willing to sell them for? Same exact concept. Let's look at the 60, right? Look at Delta, 0.35 Delta. A little bit aggressive. But if you bought them at $50, would you sell them for $60 30 days later? It's a damn good trade in a shorter period of time frame, right? Let's keep going. Let's see if we can find something. 0.28. All right. Maybe let's see if there's a point 30. All right, let's do the point 30. All right. So it's a 62 strike price. That means we are willing to sell our shares, our 100 shares of Robinhood for $62, right? On March 7th, right? And for that, we will be given a premium, right? $2.50 times 100. So we will be given $216, right? And 96 cents. We'll just say 216. Now we open up our next covered call premium, super complex premium calculator. Obviously kidding. I make this stuff because I like simplifying this stuff. So how much premium are we collecting? $216, right? What's our strike of option? Strike of option, $62. Okay, $62. That's what we're selling it for. I might just rename that instead of saying strike of option, just be like sell strike. Like just make it very simple. What is your purchase strike price? What did you purchase your 100 shares at? 50. Boom. That's what our numbers would look like. Okay. You collecting a premium today, right? Because you are saying I'm willing to sell my share immediately. Again, this is going to be keep changing, and I can't keep changing what I'm saying. So $260 would be deposited into your Robinhood account. You now would have this. Options contract, right? Your purchase strike price, you got them at 50. You're willing to sell them for 62. You got your premium for that. That's a premium return of 4.32%, right? Now, if in 36 days from now, Robinhood is trading at 62, right? A few things can happen, right? Number one, your shares will be sold and you will have a profit of $1,200 on that trade, right? $216, right? Plus you're collecting from your sell, right? You're collecting from your sell, right? So 62, and the reason that's profits on the shares is 1,200. So 62 times guys, it's basic math. I'm sorry, let me just draw it out for you. So $6,200, right? You're selling your 100 shares for, right? You bought them, those 100 shares, for $5,000, right? The difference is $1,200 in profit that you would get. In addition to that $1,200, you add your premium in, your 216, 1,200 plus 216 is $1,400. You'd be given. That is what you would get for that trade. All right. And that's it. That's it. Like now we rinse and repeat. Now the same thing goes for your cash secured. Your same thing goes for your covered calls that went for your cash secured put. You can close out your covered calls early. You can close those out early. Now this is going to really, it depends on what you want to do, right? It depends on. I'm more a little bit lenient with covered calls because why? Well, usually my covered calls, I'll let them get really close because I want to sell the shares, guys. I'm just being honest, right? And the reason for that is because look, I'm only getting 216 premium, but if it actually gets to $62, I'm making $1,200 right there. That's a massive amount of lost revenue if I close this out early. Now, there's strategies to this. If you're just a premium chaser, for sure, like you can close it out early and your return will be lower. but for the most part, like unless it really nosedives and I want my 100 shares, like I'm usually letting my covered calls get to expiration. Like blanket statement, I know, but I usually am. I usually am. I'll get into more advanced stuff later on down the line, but I think for the most of you, your covered calls, let them get there, because if you have a great, if you got in at a great price from your cash secured put, and then you're able to get a great decent premium, and your premium return is like at a 4.3% percent, right? Like that profit on the shares is a very good thing. That adds a lot of extra income, right? And that's our appreciation sale right here. Okay. Like, so I hope that's not like too confusing for everybody. So let's kind of like do a recap of this real quick of where we're at. Okay. You open up your Robinhood account and you're like, you know what? I want to get into a stock, right? That is your cash secured put. You have the money to be able to buy 100 shares of a stock. You did your basic, watch list. You have some stocks that you really like here. You identified one. You head over to Yahoo Finance and you did some basic charting to create a thesis around it, and you opened it up. You collected a premium for that, right? We collected $435 for that. Few things can happen while you're sitting around waiting for the next 30, 36 days, 30 to 45 days to your expiration. One, right? The stock shoots up like crazy, right? We can close it out early. Maybe we can close it out for $100, like at our example. We give back 100, we keep net 335, right? And that frees up our collateral to go find other opportunities with cash secured puts. Blanket statement, I usually manage my cash secured puts a lot more than my covered calls, because I want to free up my collateral to open up more cash secured puts. With when you're doing the covered call, your collateral is your 100 shares of your company. And again, I want to sell, right? I want to sell that so I can get profit on shares, right? And my appreciation sale, right? I want that, right? So I'm less like managing that. I'm more managing my cash secured puts because I want to free up my collateral, because there's always stocks going down that I can get into, right? And collect premium. I'm more premium chasing for sure with my cash secured puts. Okay. Next, our covered calls, right? Like now you own 100 shares of a company, right? That's where we can, again, go to our MSN watch list. This is where we can find out, where's there some opportunity. We do some basic charting. We make sure we're in that upper Bollinger Band range. And then we head over to our options chain. We make sure we're in that 20 to 30 delta, depending on your risk tolerance, right? And we open up our covered call and we let it ride. We let it ride. Like that's just straight up. I would say most of you don't manage your covered calls too much, because you don't really get anything for closing it out early. Like you really don't. Like straight up, like you don't get anything. But guess what? Like what if you close it out like 2 weeks before expiration, right? And then there's some news comes out and it shoots up, and you could have sold it and made a decent profit, right? Like so with covered calls, like I recommend don't manage them too much, right? Because you're not getting anything by closing it out early, right? If the stock is tanking, and this is a good one, right? Like let's say we did open up our covered calls on Robinhood, right? And tomorrow, some really, really bad news came out about Robinhood. They get into some lawsuit, they get into some trouble, whatever, disclosing, whatever they didn't do in their earnings, and it tanks to like $30. That means my covered call, I could probably close it out for like $5, right? I could, if not less. Like sometimes there's been calls where I close out for $1, right? But what does that do? It does absolutely nothing, because now Robinhood's going to be like down here towards the bottom of the Bollinger Band, right? And when it's at the bottom of the Bollinger Band, like, that's where you would want to start thinking about your cash secured put, right? But now your 100 shares of Robinhood are just sitting around doing absolutely nothing, because you're not going to be able to do a covered call, because the premiums will be crap. Because again, the Robinhood will be towards the bottom of the Bollinger Band, not at the top where you want to be doing your covered calls. You see what I'm saying? I hope that makes sense. I really hope that makes sense. So last thing we're going to be quickly talking about, guys. I know we went over a lot. Rewatch this if you have to. Is dividends. Okay, is dividends. These are going to be more safer bets. You see these big numbers, right? These great premium strike prices, right, for these growth stocks. Again, that's where a lot of my focus is for sure. But when you look at other companies, right, like for example, like our example from earlier is Coca-Cola, is it might not be a super sexy company, right? But you're collecting a dividend, and that means if you hold them and do cover calls on them, you're collecting that dividend as well, which is like icing on the cake. So let's head over to our Robinhood app. We'll type in Coca-Cola and take a look at our premiums. All right. I feel like I should have shown this first because these are going to be so small compared. So let's say you own 100 shares of your Coca-Cola, right? You maybe got a sign from your cash equivalent, or you just own 100 shares because you've been a big believer, right? So we're selling a call. We're going to go out that 30 to 45 days. We'll go again. We'll just do our March 7th. And let's say, you bought Coca-Cola at, $60, right? Let's say you got it in at $60 and you've been holding it, right? See, these premiums aren't, they ain't juicy. They ain't that juicy, right? Like they're not like, right. But that's okay. That's okay. You don't want to always be doing this strategy on these insanely volatile growth stocks, right? For the most part, when we look at Coca-Cola, like it's for the most part, like kind of just like, yeah, it obviously has but it's there even that was $69, right? Like, it's kind of just been like for the most part within a range, right? It's not a very volatile company. It's a boring company. But that doesn't mean you can't do the strategy on, like, let's say you did buy, Coca is trading at like 63. Maybe you did get in at, at like $60. And you know what? You're like, you know what? I'd sell it for 65. I got in at six. I'll sell for 65 in 36 days from now. Okay, we open up our cover call, and there's a 38% chance of that happening. All right, you're like, maybe that's a little too aggressive. Let's see 66. All right, 0.28. That's looking nice. And you'd only get paid $58 for doing it, but that's okay. That's okay. I know that's not going to give you some insane return. But let's look at it, right? Like $58, right, in premium. Your strike of option, right, is what did we say it was going to be? That's our 66, right? 66. Our purchase strike price, we said you got it at for 60, right? The premium return is crap, right? It's not really good. It's only like about 1% on your premium return, but your profit on your shares would be $600 total, 658 for a total return of 10.97 for one trade. One trade. That's not like annualized. That's one trade on your money that you made just about 11% on a trade. Stable, easy, right? So you kind of have to gauge this. So you have to make your own decisions in this, right? Like I'm not a financial advisor. I'm just some dude on the internet that shows you what I do. A portion of my portfolio, I do these boring things on, right? And the nice part about this is, let's say you do own Coke for like $60 or whatever. The reason I like the dividends is because Coke, what they give around a 3% dividend. I might do covered calls on this for years. For years. I'll just do monthlies. Every month I'll come in here. I'll do my 0.20 to 0.30 delta, collect my $58, log back in a month later for it. It'll be expire worthless, and I'll just do it again, collect another $58. And I'm also not only collecting premium there, but I'm also collecting a dividend. I'm also collecting a 3% dividend. So I'm double dipping. I'm beating people that own Coke that are just dividend investors. Again, I get in arguments with dividend investors online like all the time because it's like, dude, what are you doing? What are you doing? Right? You're literally just missing out, right? I'm creating an extra dividend essentially. I'm getting an extra $60 a month, right? From just opening up covered calls, right? On the company, right? Like that's as simple as that. Alrighty, guys. I hope you enjoyed it, man. Quad option strategy. This is it. This is what I've been doing now for like 7 years now. And I think it is the best options trading strategy out there, right? You're selling puts, you're selling your cash secured puts, you're selling cover calls, you're collecting dividends. Again, they're for the boring side. Oh, I forgot, guys. I forgot because some of you like that. Or I want to show you guys one of my favorite companies to do this strategy on. Again, it's a boring company, but it's a lot more easier to get into, especially for cash secured puts. And that's American Airlines, right? I do love American Airlines, a company I've been doing this strategy on for 5+ years, and I love it because it's cheap. 100 shares are only $1,600, right? So we're on American Airlines. Let's go to our chart real quick. Okay, not bad actually. I'd like it to be closer. You could see. Let me zoom in a little bit more here, guys. I'd like it to be a little bit closer to that bottom of the Bollinger Band, but that's okay. For the example, we can see it's under 50. I would like that to be like high 38s or low 40s. Trading at 1694. We're on a red day. Okay, perfect. This could be a good opportunity, at least today, for an American Airlines. So let's type in American Airlines. Let's look at our AAL. Again, premiums aren't going to be like absolutely insane on these either because it's a boring company. It's American Airlines. Come on now. Go to our sell. We're selling a put. We're going to go out 30 days, 36 days, March 7th. We'll just use that. And we can take a look at what our premiums are going to be. Nothing crazy. And these are definitely moving closer towards at the money. At the money basically means at the share price. In the money, out of the money, guys. Don't those are like yeah, like we'll cover those terms. Like just you understand if you watch this video and like things are making sense, you're leaps and bounds ahead. All right. Don't let people confuse you. So you buy their course. So here's a good one: $16 put. A 0.31 delta. Okay, not bad. A little bit aggressive. I will collect. Well, I just saw a 40. But whatever. We'll just do our 34. Go to our cash secured put calculator. Okay, how much premium we collecting here? Let me just delete that so it's not there anymore, of course. um we're collecting $34. What's our collateral on our $34 is 1600, and that's a 2.3% return in a single month. Hell yeah, right? That's actually not bad. Guys, I'm sorry, we were cooking way too long. My screen recording cut out at 60 minutes. But as I was saying, that gives you a 2.3% return on American Airlines, which is great. But here's the cool thing with these kind of companies that I like to do. I like to open up multiple contracts with them. Because like $34 is like nothing. But again, it's because it's a small number. It's only $1,600 in collateral for $34 a month, right? Essentially, you're essentially like creating a dividend. That's why I kind of like look at it. So for example, oh my goodness, with like over here, you can have multiple contracts. And this is where the game gets fun, right? Let's say you open a hundred contracts with American Airlines, right? You get paid $3,800. Now, again, you need to have that money. You need $156,000 as collateral in your account, right? Now, American Airline is taking a dump today. I do release these videos, a day or two delayed. Obviously, there's some big news that very sad news that came out with American Airlines. Obviously, they had a really bad accident with the helicopter. I'm sure you guys are all aware of that. But being in tune with market news is extremely important for you. Because like that's you now know, like, okay, why is American Airlines going out there? Well, there's this news that came out, right? It's obviously it's impacting them. Now that has to be like, you have to gauge your own kind of like moral compass on this kind of stuff. I'm being straight up. But this is when there's opportunities usually. And I mean that in like not the sleazy way at all whatsoever, but usually when there is news, and unfortunately bad news, there is a lot of opportunity that comes out of it. Like it's just the way it is. It sucks. I hate it that way. People lose their lives and people are getting rich off it. And I hate that that's the kind of world we live in. I do. I do. But we have to sometimes take our emotion out of that stuff. We have to take our emotion out of that stuff as traders. It sucks. It sucks. I hate it. But it is the world we live in now, right? And I do recommend you guys like stay up to date with news. As somebody that wasn't on X for like the longest time, you need to be on X. Like, go drop me a follow. I try to stay up to date on everything and share everything with you guys that's coming out. Like Microsoft's Big Dip, I'll share, and I'll share some other quick tips and stuff that are happening in the markets at Only Peter Prue. But you need to be staying up to date on what's going on in the markets. When there's bad news coming out, when there's good news coming out, and really being in tune, especially with your watch list, because that way you're going to know when something happens. Something good happens, something bad happens. Is this my time to get into some puts? Is it my time to get into some calls? Right? This is where opportunity lives, right? And X is the fastest way to do it. So go drop me a follow if you guys want. This is where I kind of like post basically multiple times every single day. Try to just share insights to continue the conversation. This is where you can engage with me. Again, just dude, I'm not gatekeeping anything from you. Literally, just go tag me in something or drop a comment or comment on one of my posts or comment here and I'll answer. I'm here to help you guys win with this stuff. Nothing will like make me feel better than you sending me or commenting or sending a screenshot, tagging me, whatever you got to do, that you like made your first premiums, right? Using this stuff, because your mind will absolutely change. Trust me. I know the first time you do it, like the first time you do it, you're like in here, right? You're open up your one and you're collecting $4 of credit, right? And you're so scared, your palms are sweaty. right? Knees weak, and then you review order, and you're like scared, like, am I gonna do something bad? Like, what am I doing? And you finally collect that premium, and you're like, wow, I just got $40 in my account. Paradigm shift. That's what I want from you. That's why I started this channel. That's why I'm so blessed that I have the time to be able to be able to put into this, to be able to share this with you guys. Because I wish somebody taught me this stuff sooner. Pete, they overcomplicate this stuff for God knows what reason. That they make it sound like you need a finance degree. You know, I love reading books. I have a massive bookshelf, right? Like that, they complicate it to infinity and beyond. My duty, I believe, is to simplify this stuff for you guys, because financial literacy, educating on selling stocks and trading options is not complicated. People do it to complicate it for you so they can sell you something. Whether it's, oh, hire me as a financial advisor because you're too dumb to manage your own money, right? Or pay me $10,000 so I can teach you how to do this, right? You don't need it. You could do your own stuff. You can do this, right? You just need to go through a little bit of an educational period. And I can't promise you, I can't guarantee you. I literally am just a dude on the internet, but you will be way better off, right? You will be way better off. This stuff is not complicated. It just takes a little bit of time, just like everything in life. First week sucks, second week sucks, and then third, fourth, fifth, and your worldview starts to change. Guys, I hope you enjoyed this. I had so much fun shooting. This is a long one. Do me a favor, new channel here, so I appreciate any love that you guys can give me. Two lucky commenters down below, we'll jump on a one-on-one call. We'll talk all things options. I can share you guys more in a more one-on-one setting, ask your questions, and we can just vibe out. It'll be a great time, right? This is the stuff I literally do full-time now, so I love to chat about the stuff and help you guys out. Nothing to sell you and nothing like that. So but yeah, do me a favor, guys. New channel, any kind of engagement, likes, comments, shares, all that good stuff. I would really appreciate it. And go follow me over on X at only Peter Peru as well. But guys, I hope you enjoyed it. I will see you guys tomorrow.